apologise for that. I haven't been feeling too well the last couple of weeks. As you can probably hear, I'm still a little bit bunged up, but you know, we're getting over it. It hit me pretty hard. I don't know what I got, some kind of flu or something. The kids brought it home from school and it just walloped me. And also, I think a couple of weeks ago I hadn't traded for the week, so I didn't think there was a point in doing a recap because there was nothing to recap. I only want to recap things that I've taken. Obviously, there's a lot of recaps now as well, so I don't want to just, you know, put out videos. Not pointlessly, I know there's always value, and I appreciate all your kind words about the value in the videos. But I want to, you know, like, oh, I was in this trade and really share a thought process rather than, you know, just go over a trade. Having said that, you know, I took a nice trade on Friday, just pre-NFP, New York. I went out for the morning, went out for breakfast with the kids as they had a day off school, teacher training or something. They call it like an inset day. So I went out for breakfast and stuff, and then came back, and yeah, I just reacted straight away. I think I took about 11%, and that's my year done. I'm gassed, to be honest. To be able to be done for the year this early on is pretty mental. You know, obviously, I'm still going to be here, I'm still going to be present, I'm still going to do my routine, I'm still going to turn up every day, I'm going to do my end-day markups. But physical live trading, I've kind of decided I'm just going to have the rest of the year chilling, you know, focusing on a few other little bits and bobs, focusing on myself, my health, really getting back into the gym, you know, obviously providing value for you guys, and just enjoying time, you know, with the kids, especially when they finish school. They break up like the 17th, I think. So I want to make sure I actually have some proper wind down time. I've worked my arse off to get to the position I'm in. I want to make sure I'm enjoying it. Obviously not taking my foot off the gas, but it's important to reflect. It's something I don't do enough. I didn't do enough, and it definitely plays a massive part in our progression. So yeah, I thought I'd you know, waffle about that. I hope you've all had an incredible year yourselves. I'm sure you have. Make sure you are looking back. Make sure you're reflecting. Make sure you're, you know, seeing how far you've come, what you've achieved. If you haven't achieved something, you know, ask why. But again, don't put too much pressure on it. You don't have to achieve something by a certain amount of time. Obviously, having goals is huge. It helps us, you know, focus and work towards something. But at the same time, it can add pressure sometimes if you're forcing goals, and you know that can lead to forcing trading. And we all know that if you force trading, it's like a fart. You'll shit yourself. So it's not worth it. As you'll notice, if you're following my recaps and you're following my markups and you're following everything I've been preaching since, like, I don't know, April, it's all about having that one edge. Of course, you'll refine a little bit, you know, since April. So now I've, of course, added in a few little bits and bobs and tweaks, kind of more simplifying things and filtering out trades, because I don't want to be in every single trade and I don't want to trade every day. But it's always the same thing over and over again, and I just look for the same thing over and over again. And if it's not there, I won't trade it. I won't force it. I've had my times doing that, and it hurt. Sometimes it works, sometimes it doesn't. But at the end of the day, for longevity, for me to be able to go, can I do this for 5 years, 10 years, whatever? I need to be able to have a process I can follow over and over again. Quite systematic, obviously, of course. You need to adapt and react. You can't just always have this robotic approach, but at the same time, it should be that you want to see the same sequence of events. You know, the thing with these concepts is there's so many ways you can trade it. It just needs to be what works for you. Anyway, let's get into the short. So if we just go on the 4 hour, obviously at the moment, you know, I got the 4 hours bullish. If you had this as your high and we only wicked the high, so we're still bearish, again, that's not wrong. You know, looking at this, I mean, it's definitely structure. You know, you can't say it's not. If you haven't classed it, like I say, no biggie. You could have used this leg, so therefore you're still bearish. The way I was seeing it is we've had this mitigation. We've taken out all of this internal range liquidity. We've actually taken out the ERL up here as well. We've had that mitigation. We've had an aggressive reaction. Now, obviously, it failed to break and close below the lows. So, of course, you could say, well, it then essentially should break the high. We had an attempt on the high, essentially, with this push. It failed, and it reacted to this 4 hour supply zone, which I know many of you may be like, well, it's not really a supply zone. It didn't break anything. Of course, oh, what happened there? Of course, you know, you're right. It didn't. So essentially, yeah, you know, it hasn't broken anything. But nonetheless, if you can start to make a story and build a story out of it, then you can start to follow what you think could happen. Obviously, if we just go to the weekly quickly, we are coming off this weekly here. that we've, you know, kind of held in between. Now, it wouldn't surprise me if we did pull back into this kind of weekly range before continuing lower. Of course, we could go and push higher and break the highs. I still feel like we're coming down here, but we'll see. So on the 4 hour, you know, looking at it like this, it's like, right, okay, well, let's follow order flow. Let's follow supply chain, you know, however you want to call it. Let's follow it and see what is happening. So as you can see, we've had mitigation, then we've had, I'll draw this box, I mean, it's very close, but then we've had another mitigation here. So we have mitigation, and then we've got this guy. Okay, so essentially, if we're seeing bearish price action delivered into the market, we're essentially saying to ourselves, you know what, shorts could truly be on the cards here. So we could look to play into something. Obviously, we can go to a low time frame to see what's around here, or, you know, just targeting these lows. You have to remember with the RR of like a 2 pip stop, 1 to 10s, they're like going to be somewhere probably at that low. Down here, you're looking at more 1 to 30s. Down here, 1 to 50s, 1 to 100s. Old way of trading, you get in here, you know, you have to target that because your stop loss is up here. So, you know, your stop's there, you get in here, you target that, and you might make a 1 to 1. You know, that's how some people trade. I remember doing the same sort of thing. So at the same time, don't overshoot. You know, you have to remember how much 10% is. You know, we preach this bunch. It's essentially what's going to get you funded, and it's going to change your life, whether that's leaving work or whether it's adding to you know, your current income. So don't overlook it. So obviously, you know, seeing that, I'm thinking, okay, we could go bearish. Obviously, until any of these fail, which obviously they're building liquidity, until they fail, in theory, we should be going short because we're seeing supply holding. So I'm like, all right, let's have a look on the 15-minute and let's see what we can do. So obviously, you know, at this point in time, I'm like, all right, well, we very likely could make it to this. What else do we have, you know, within the way? So obviously, if we look at this, you're just following bearish order flow, mitigations to mitigations. Now I'm just going to clean things up a little bit. Remember that 4 hour. I'll remark in a minute, but I'm just going to clean things up because the thing with an FP, right, is it's always about looking at what is it likely going to do, or what does it want to do. So I had this marked out here, and the reason for that was simply, remember the bearish leg, and this is something that people I think get confused about. If you don't, let's say that's not there, right? Now you think this is all your structure. So you're like, oh, you know, this is low in the leg or whatever. We're actually within these swing points, okay? That's your high and that's your low. And this is all internal. So at the time, yeah, I was looking for this, you know, I thought this might get hit. But once you see that, again, that hit the 4 hour that we drew up before. And then you're starting to see bearish mitigations, okay? So you're like, okay, well, essentially we're following the supply chain here. Of course, price doesn't have to do anything, but you would expect potentially that level could get hit. And you've got this level. Bearing in mind we're in this overall level, okay? I know some people said about the whole premium and discount. This level for me was actually within the premium because this is my swing. So if you look here, this is the EQ. Price is sitting nicely in this level, okay? So noting that, again, this is where intuition comes in a little bit and experience, and again, it comes from markups and just live markets. I've seen this price action so many times where we have an aggressive push, we have a pause, and then we have another aggressive push. And what it shows me is it's a level I want to happily mark up. Now, one thing to note, and this is something that, you know, Alex has been pushing this for a while, you know, big ups Alex, where if the leg that pushes doesn't have any kind of structural inducement or liquidity, he won't take the first mitigation off of this without seeing some kind of liquidity taken. And I think for everyone looking for those small refinements, this is huge. I've been looking at it for a while, and it kind of goes with the whole thing we've been saying about never trust the first high or low of a mitigation. But obviously sometimes the first high or low does play, and it's like, oh, how do I get around that? And obviously that would be the simple thing of, you know, if this had a push, pullback, and like really close to the POI, then that could be your inducement for this mitigation. So of course you could potentially look to take it on the first mitigation. But knowing it hasn't got it, it means you want to see some form of liquidity built and swept within this POI. Now, it's really, really good. I'm all about those refinements in the way of, I don't want to take 2 hits and then the third one work, because sometimes if you're having a bad day or your mind's not there, you might not take the third trade. And I know a lot of people have been seeing it the same. So what I would want to see is, I'm like, right, well, if I can filter out trades, sick. So with this, you can say to yourself, right, when the price comes into here on the 1 minute, I want to wait to see a true sweep. You know, that's that whole liquidation that's in my trade plan. I want to see a sweep. So putting that little box there and knowing that there's no inducement means, right, well, I want to see a sweep. But as you can see here, we had the first high and it failed. We had a sweep. So now we've had a liquidation. If this POI is to hold, we just need to see our entry model, and then essentially we can target, you know, these levels of demand, right? So if we just go on the 1 minute, I'll just show you how that looks. Obviously here we come in. Okay, now a lot of the time for me this happens and I just blame it on my hours. I'm like, oh, between 10 and 12 I don't trade, so I wouldn't have taken this. But I do get a lot of people say to me, well, what if this wasn't between 10 and 12 and it was at like New York or London, would you have traded this? Now, if you utilise that whole, we need to see a high swept, you're not trusting the first high of a mitigation, right? Then the answer is no. Because whether you make up that you've had this flip here, which for me, I wouldn't play really unless I was feeling real brave, because you've got this underneath it. This is a sell to buy, but it didn't really break anything because it's just part of the trend. Obviously here you had a pullback and then you pushed up, so you've had your sell to buy, so you could have had that marked out. But notice how, again, price just trades through it. So yes, we complete change of character. You know, we take out that high. Why? Because we had high, high, pullback, break. So it confirmed that high. That's our low. So we've taken out the low. So you could be looking and going, oh, I'm going to trade off here somewhere. Well, no. Because one, remember, first high of the mitigation, we need to see it swept. In this instance, because if we go back to the 15 minute, we don't have any inducement for this POI. So likelihood is we will create inducement inside the POI, take it out, and then we'll go. Okay, so it's a great way to potentially filter out that first kind of loss, if you like, because people might have taken a loss here, and you might not have the mindset to get back in. Anyway, so after seeing that, like I say, I was out at this point, so I wouldn't have traded anyway. I got back to my charts, and we weren't even here yet. So let me just play it on a little bit. I think I got back to my chart and we'd broken this low, and I was here and I was like, damn man, that looks nice. So if we mark it out, right, we'll just mark this up. So we've had liquidation, we've had a change of character, took the high, took the low, right, we've had it's not the best V shape, I guess you could say you want to see a real aggression, but nonetheless, what does it do? When it goes in, it goes out. It's a V, okay? We've had that. We've had, depending on flips, you could have said that we had a little flip here, because this, let me change the colour. This reacted here when it came in. We had a reaction, it pushed, and then it failed, which printed these tiny, tiny, tiny little buy to sell wicks. So of course you could have entered here. Again, I like to see the first level of supply, kind of like it's like a respect. Again, Alex has spoken about this before. I've unintentionally done it without really, I guess, realising. But it's nice to see a clear, look how clear this is. Look at this. You're trying to figure out the flip, right? Let's say you didn't use these flips, because being honest, I didn't. A little bit too aggressive. I want to see the first level of respect. Look how clear that is. You don't even question, is that a flip? Well, what does it look like? Sell to buy, broke the highs, level of demand. Price comes in, clean as shit reaction, and then we fail. It doesn't break it, it holds. Then all of a sudden, transfer of orders come in here. This buy to sell is the last mitigation. So we can go, oh, you know, if we're following order flow, if we're following mitigations, and if we're following supply being control, then this realistically, this buy to sell should be the last mitigation before we see the floor. Okay, so notice the difference, because you'll see me say this a lot in the Discord. You see a lot of us say it. Look how clear it is. Look how this is. I'm sitting here like, oh, is it that? I'm not sure. Oh, is it that? No, it broke that. Oh, what about this? Oh no. Okay, yeah, it's this. Yeah, sweet. No, man. Like, just if it looks shit, which that does, not interested, mate. Wait for it to look good. And if you miss the move, you miss the move. Who gives a shit? Okay. So if we play that on. What I'm seeing here is I've had my first level of respect here. We've had a demand fail once. We've had a demand fail twice. We've had a pullback, which has mitigated the extreme. Now, yes, we could come in for a second mitigation of this whole buy to sell candle. But I'm seeing this and I'm saying to myself, again, seen this price action before. I'm happy to play that as my entry. Where's my stop loss going to be? Well, if I play the open, 2 pips is just under this wick, right, with spread and stuff. So I will literally pull it back a bit. Remember, I don't place limits, I hit market. So all I do is I put my RR tool there. As soon as price is coming back, I go onto my MT4, and the minute it enters this POI, I know that I can hit it because my stop loss will be showing me it's above that. I'll hit it. The key is to hit market as it's coming back, not as it taps and then drops, because you'll get filled somewhere here, and you've got a stop up here, and now you've got a lot size for 2 pips, but you've got a 4 pip stop. That's when you can be in trouble with market. So like we say, if you're hesitant and you haven't got a limit and price is here and it's just chilling, you need to hit it, because if it just does that, you're going to get filled down here, mate, and that ain't good news. So also, to give us extra confidence, I've mentioned a lot of the times I like to look at the 5 minute. I like to see what's going on. One, for refining POIs. As you can see here, you've got this buy to sell. I think we just sweep the high of it and we actually mitigate. Did we mitigate that? No, we missed that, I think. Did we miss it? Yeah, it just misses that. So in that instance, like, okay, cool. But what I noticed is, look, we take the high, we take the low. So we've now just had a 5 minute change of character, right? So again, you know that this 5 minute candle is essentially the last mitigation. Now, of course, if we look at it, it's a 5.2 pip stop. Now, again, it's not big. It's just for me and my plan, it's not enough, because I need to get a 1 to 5 RR reward on this or I won't enter it. And if I'm looking at my level of target, realistically, I'm aware that any time we come into this guy, this wholesale to buy, which is probably cleaner on like a 30 minute, there you go. You've got a really nice 30 minute, which is what caused us to break these levels and essentially look, 30 minute change of character, 15 minute change of character. This created that. So I'm aware that we could, of course, react off this. So I'm looking at targeting that, right? But then what I'm doing is going, all right, that's a 9%, so it's definitely worth the risk. And then I'm going, okay, well, if we refine it to a 10 minute, it's got a little bit more risk to give. There comes your 11%. And then with inside that, if you want to, you've got this 5 minute, which is pretty much a 10. And you can say, right, I think realistically, that's where we're going to get out. All you've got to do is when you're doing your daily markups, just make sure you go on the 5 minute and just see how often it hits the 5 inside the 15 or the 10, for instance. Because sometimes the 15, you're like, I'm going to mark that. I'm not sure. Well, just go down a time frame, mate. You'll find it much cleaner. That's why we say use your time frames. So when we're looking at that, I'm seeing we've had a 5 minute change of character. So again, I've got added confidence. Then if I go on the 15 minute, I'm also seeing again, I've had a 15 minute change of character. Why? We took the high, we took the low, we've just printed a 15 minute buy to sell, right? Now, obviously this is just that whole buy to sell. It's more so the wick. So of course you can go to a lower time frame, such as a 10 minute, and you can see a clearer buy to sell. Let me grab my battery charger before my Mac turns off. 1 second, gang. Not very prepared, am I? You can tell I haven't done this for a while. Disappointed, Albie, mate. So obviously you can see that we've printed that buy to sell. We've had that 15 minute reaction. Sorry, I'm just going to get my freaking charger in. There we go. We've had that 15 minute reaction. We've taken out that first high. We've waited for the sweep because we had no inducement inside this mitigation, inside this creation of this POI. So we've just awaited the first high to get swept. Okay. Go back to the 1 minute. Realistically, at this point, what are you going to possibly trade from here other than that? Now, of course, you might say to yourself, you know what? I'm going to put a trade on this whole buy to sell here. This guy, right? Buy to sell. That's the 5 minute. All I'd say is if you're trading that, you want to have your stop up here still, because of course it could come in deeper. If we mark up the 5 minute, right? It's this whole. I'll put it in a bigger box. Right, it's this whole buy to sell. You can't just enter here and put your stop there and say, yeah, I'll be cool, because we've got a 1 minute buy to sell that's not been mitigated. Of course, it might not get there. I made a decision in the moment to say I want to wait for it to tap this, not play a reaction off this. I decided, and that was, you might say, oh, why'd you do that? In the moment, that's what I decided. So I went with it. So here's my area I want to see here, and now it's just a case of, does it come back or is it gone? And obviously, don't get me wrong, when it's down here, you might think, oh, that's dead. And I know I keep seeing people message saying, what do you do? How do you know when price has gone or done? you know, don't get me wrong, when you break that, you might think I ain't coming back. But then that buy or sell caused that break. We know that's the 15-minute and 5-minute change of character. So we could well see it come back to mitigate that. We've had the liquidation. If we hadn't had the liquidation, I'd be like, oh, I'm not taking it. Because just look here, we take the lower out, come back, we create the liquidation. So you'd have got slapped on that trade. Okay? The time I'd remove it is if this sell hit this demand, I'm not having an order sitting there. Because that hurts. I've had it happen to me a lot of times. It's not for me, so I wouldn't be playing that. So at this point in time, I'm still very much like, right, well, I'm waiting. You know, what I normally do is obviously when it came down here, I'm not watching each candle form. That would kill my head off. I'll set a limit usually like there, not a limit, an alert, sorry, to just notify me, oh, it's coming back, because then I need to get my ass up here. If I'm not in the bedroom on the charts, I need to get back to them because I don't really want to execute on my phone. Obviously, if I'm out, I normally have a predetermined lot size in my head because I use 2 pips, so I can just put I can just slap on my lot size and I know what I've got to hit. So I will just look at my phone and go. So then obviously here, you know, at this point in time, it stops dead. Now, I was watching this at the time and I was like, it's done me, that teacher. And it's pretty much the 5-minute EQ. Did I go to hit it? Yeah. And then I thought, no. I'm going to wait. It could be building an inducement. I'm not rushing into it. Let's see what happens. Now, again, you do have a 1-minute chock here, right? So you might say, I'm going to play that. Now, that's fine. You can enter here. You just need to cover that. Because you can't say it's got to stop here now, right? This could be that inducement, enticing people in early, just like here, right? Look at this leg. 1 push. So remember on the 15-minute when we had 1 push, right? On the 1 minute we have 1 push. There's no structural liquidity in this leg to take. If we'd done something like this, then yeah, fair enough. You've got that to be taken, right? At this point in time, we don't have that. We have 1 clean push. So prices, again, it's built liquidity inside the 5-minute, chocked. It's enticing everyone to do what they want to do. Sweep it, and then it will go. Just like here. It's coming to the 15-minute. It's chocked. And then it's created that liquidity because to the left there was no inducement. Swept it, and it goes. So it's just that classic thing of being aware of what's happening and going, you know what, I've made the decision on this, I'm not going to go. If this leg had something in it, like if it had, like, I'm so shite at drawing. If it had that, then that, and then like a buy to sell, then yeah, all right, you know, you could say, oh, it's got inducement. Maybe I could hit this, you know, now because it's confirmed this level, for instance, if you wanted. Of course, it could just be inducement for that. But what I'm saying is, notice how those clean leg pushes tend to fail a lot of the time unless they build something. So now that's built, I was quite gassed. I was like, yeah, you know what, I'm pretty happy with this. So it had to be quick because it comes back. Like now, obviously it's coming back, right? The minute, let me move this over a little bit. The minute it enters this point, I'm kind of waiting to hit market, okay? And obviously I hit market here, and I think as I hit market, I think I got filled like that. I just adjusted it. Straight away I'm saying to myself, right, aggressive BE on this, you know, NFP's coming up. I would like to get my risk off pretty rapid. So break even's there. Wait, see what happens. We get BE, beautiful. I'm in the trade. Now it's a case of when am I getting out here. So I have a TP, and I usually put it a little bit above, just in case spread or something doesn't trigger it. I've had a few little taps and it goes. Have a TP like here. I think I pulled 11% on that. So yeah, something like that. Had a TP here, and I was like, I'm going to get out there. Obviously, then I went into the Discord, did a bit of waffling. I'm like, right, we need to break these barriers. If we start breaking down these demands, then this is all getting swept, and we're coming into this. So it's just a case of waiting, you know, see what happens. Obviously, it pulled back after breaking this. Natural, we've broken the level. Then we start to kind of melt off. I'm obviously cautious of time here. We're getting into sort of nearly 1 o'clock. I'm like, all right, I would like to get out of this. And obviously here, I hit TP, I get out, I'm done. Look how clean, look how obvious that is compared to this. Massive difference. Go over all the other trades. Go over the one I posted in resources, I think on Friday, underneath Miguel's entry models. I posted what I want to see entry model wise on actual candlesticks, right? Again, it's the same thing. I know that trade got pumped, but why did it get pumped? Well, if you go back to the 15-minute we were playing out of, I never took this trade. Obviously, I didn't do it to say, oh, here's a signal, take a trade. I did it to say, we could see a trade off this level. Now, of course, this one was in discount, lower in the leg, but it was a sweep, right? It had taken out all this liquidity here. But what does this have in common that we've just spoken about? It has no inducement. The leg, again, is inducementless, right? So what do we need to see? If you're looking at here, what do you need to see here? You need to see some kind of inducement built. Because if it's not built, then you're going to be the inducement. Well, if you go on the 1 minute, what happens? Gets built, runs. If you don't get in this high is the first high in the mitigation. So what's going to happen? It's probably going to fail. What happens? It fails. Why? Well, this was the inducement. So you became inducement. There was no inducement within the leg on the 15 minute, right? And it was in a discount. And if you use that as a major confluence, it's very low in the leg. You could expect a deeper pullback, right? You've had a deeper pullback. We've had a change of character. Again, after a change of character, I'm expecting it to pull back into what caused a change of character. It did. So that's also why I had the confluence for the sell. So then, again, showing you accuracy. We've had a 15-minute change of character. Tell me NFP is random, mate. It's not random. It comes into the level. See you later. What does that hit? Again, I didn't hit the 15-minute, mate. It's a load of rubbish. No, it's not. Because look, you have this whole buy to sell. What is that on the 1 hour? Oh, it's a 1 hour POI. Oh, yeah, sweet. What is it on the 4 hour? Oh, yeah, it's a 4 hour POI. Oh, okay, so I can make sense of that. And then if you want to trade NFP, you can obviously go into the seconds. You can look for your shorts if you want to play reactions. Understanding nothing's random is really important because it will keep you in so many trades. As I was saying about the resource section, though, sorry, my bad. Where I marked that trade up here, it was beautiful in the sense of it did everything we want to see, right? Barring that's happened that first mitigation and the sweep. Now I want you guys to test it and obviously look into it, gather data on it. I've been marking it for a long time about not trusting the first high or low into a mitigation. Obviously, after chatting to Alex a little bit more in depth, he mentioned that obviously he's been working really hard on his liquidity concepts. Obviously, not trying to steal his limelight here at all. And he mentioned obviously about, you know, how he sees the legs, and I was like, oh, actually, that makes a lot of sense to what I was looking at. It's what it's all about, and it's why we share it with you guys. Mark it up, log it. How many levels that don't have any kind of structural liquidity like this? How many levels do the first high or low fail? If all of them fail, or 8 out of 10 fail, you could add it to your plan that I'm not trading this mitigation until it's taken out the first mitigation of it. So the second mitigation I'll trade. Again, it's not like bulletproof source, it's going to transform your trading, but it's another tool and it's another confluence that can help filter your trades, okay? I'm only trading out of POIs. I'm not really just following on the 1 minute anywhere. I like to just get in on the 15, target the next 15. That's 11%. That's a lot of wedge. I'm chilling. Like, I don't need to do anything else. So I'm all about reducing that volume of trades, and this is something I've noticed, you know, it really helps. So yeah, I hope that, you know, is something you can look at. Just like up here, you know, we don't really have any inducement. You could expect this mitigation potentially to fail. Obviously, this is an NFP move. It tags it and it does a madness. And then I think, you know, the sell ran. You took out those lows, and then now we're up here somewhere, which looks like, I mean, that's quite aggressive. We might reach this, but pay attention to this. It's got no inducement, right? So we could see the first high swept, and then it could go. If, of course, the narrative says it wants to go short, it could now go long. I don't actually know what that came off. Probably the EQ of the wick. Yeah, so we've hit the wick. There's probably something there. Yeah, we've hit this sell to buy in the 15 minute, and obviously we've had quite an aggressive reaction. We could see, of course, we're in the weekly still. We could, of course, see longs. But yeah, you know, I thought I'd share that recap with you guys. I hope there's value in it. I know they're all very much the same. It's also why I chilled out a little bit, because I thought, well, I'm pumping out the same thing, but I didn't realise how much value they add. Obviously, there's a bunch of recaps coming out, and because a lot of us trade the same pair, it's always that classic. If you don't want to overflow and do too much, that you guys are like, nah, there's too much going on. But yeah, I hope that helps. I hope you all have an incredible week. Let's smash it. Peace and love, guys.